Hello guys, welcome back to my channel. My name is Andrea, and in this video I want to speak about Pfizer, if it's a buy based on the dividend yield theory or not. So I bought Pfizer last year in the autumn, and I made a similar video. I bought this stock based on the dividend yield theory. From the capital appreciation, I'm now more or less flat during the year, but I was able during this year to collect 7% dividend, which is also very nice. Pfizer is a pharma giant operating worldwide. They are most known for the vaccines for COVID and drugs for the COVID treatment, but they are very big also in the oncology and also other vaccines, and they have also few treatment for some rare diseases. At the time of recording this video, the Pfizer stock is trading around $24 per share, with the dividend yield slightly above 7%, which is one of the highest in a big pharma sector. So what is a dividend yield theory? The dividend yield theory say that every stock have its normal or average dividend yield, and when the dividend yield is well above this 5-year average, the stock may be undervalued, and the other way around, when the dividend yield is well below this 5-year average, it may be overvalued. Basically, it is about the mean reversion, that the dividend yield acts like a safety net or a magnet, and over the time, stock price will adjust so that it's trading with the average dividend yield. And one other important criteria is dividend yield theory you can apply only on the companies that have a credit rating A minus or better. So let's put this in the context with the Pfizer. The Pfizer average dividend yield is around 3.7%, as we can see also on this chart from the Simple Wall Street. And in the time of recording this video, the dividend yield is slightly above 7%, 80% higher than its historical average dividend yield. And this apply to the post-COVID years as the pre-COVID years. The only difference, what we can see also on the chart, is in the pre-COVID years, the dividend was for some reason able to grow faster. So applying a dividend yield theory, this means that if the Pfizer just revert to its average yield with no dividend growth, stock price would need to rise in the mid-30s, so it would be traded around $35 per share, which is around 40 to 50% upside from today levels. So according to dividend yield theory, the Pfizer is undervalued. So to make conclusion, how the dividend yield theory work in this case, the Pfizer have some problems, there is no doubt about it, and therefore there was some sell-off, and therefore the stock price went down, which caused the dividend yield go up. And the point of this theory is, if they have a good credit rating, which they have enough dry powder to revert this situation they are in. And in some point, they come buyers, which will then think, okay, we know that Pfizer have this and these problems, but they can solve these problems. It's not perfect, but we can lock ourselves in the 7% dividend yield, which is almost all-time high at Pfizer's dividend yield history, at least in the last 10 years. Like this, the buyers will come in, which will push the stock price up and the dividend yield down, and this is how the mean reversion happen. Another thing what I would like to look in this video is if the Pfizer's dividend is safe. According to their earnings report, in the first half of this year, they had a net income of 5.9 billion, and they paid dividends in a value of 4.9 9 billions. This translates the payout ratio of 83% based on the earnings. But if we look on the free cash flow was only 0.6 billions in the first half of this year. So the dividend was approximately 8 times higher than the free cash flow. That means that the Pfizer needs to finance dividend through some other way. And in this case, they finance this dividend through the sale of their stake in the Helion for 6.3 billion. So why they have such a low free cash flow? It's not because their business is unprofitable. It's because the cash hasn't kept pace with the reported earnings. And when we look into their earnings statement, they say it's because receivables was not collected, so they sold their drugs but didn't get paid for it right now. They will get paid later. They are building up inventories, which is also tying up capital, and they also pay down their debts. So for now, the dividend coverage by a free cash flow look bad, but it's possible that the cash flow improves in the next quarters and working capital normalize, and dividend they will be able to pay their dividend from the free cash flow. And another reason why I think this is their management. Um, so their management, they lose a lot of credibility in the last years. The huge cash flow from the COVID vaccines, what they have, they failed to invest it effectively. They want to have a bigger compensation packages. This is fortunately blocked or pushed back from some activist investors that are on board at the Pfizer. But the management at Pfizer launched 5 billion plus cost-cutting program. They want to sell non-core assets like they did with the Helion, and want to focus more on the oncology and obesity drugs. And they also want to make savings at the staff, so they are firing some employees. And their target savings with this program is 5.3 billions annually by end of 2027. And by the first half of this year, they was already able to save 5.2 billions. They had also some cost expenses, which was roughly 5 billions with these programs, like employee termination benefits and steep asset depreciation. But they are on a good way, and from the next year, when they will have these savings without the expenses comes with this program, then I think the dividend will be covered by a free cash flow. So I think the dividend is safe for now. So let's conclude this video. The dividend yield theory is not about buy and hold forever. It's about buy and take then this upside in the stock price when the dividend yield returns to the mean. Of course, if you are more income-oriented investor, you can hold the stock and get collecting dividends. But the mainly idea is buy, sell when the mean reversion happen, and in the meantime, get reward by collecting the dividend. As always, this is not a financial advice. Let me know in the comments if you own Pfizer stock and what do you think about this. If you find this video interesting, please give me a thumbs up and subscribe so I can see you later. Bye.